What's up, Capstone family? It is April 19th, 2024. Thanks for subscribing. Thanks for plugging in. I appreciate you watching. This week I heard something that, there are a lot of ways that people can sell real estate in this market. We heard this week that the company Homey, which entered the market a few years ago, is no longer in business. It's disappointing, but again, it's one of those opportunity companies that's trying to, recreate the market a little bit and take their market share. Another interesting case, though, that I wanted to bring up, which I thought was interesting and I'd not heard of until this week. So the Senate here in Arizona passed a bill, 1218, Senate Bill SB 1218. And what this bill does is it prevents companies from signing essentially like listing agreements with owners of real estate that last for longer than a year. Not only do they last longer than a year, but what they do is they cloud title. So these companies will come in and say, hey, seller number one, I'm going to give you $5,000 to have the opportunity to purchase your property in the next 40 years. And I guess this was a thing. I didn't even know this was a thing until I read this article. And they were saying, we're going to put a lien on your property, giving them the ability to sell it within the next 40 years. And what that's doing is preventing people from basically doing anything else with their home, because now there's this cloud or this lien on title, which can prevent people from getting refinances, which can, just hamper their ability, of course, to sell in any other way. But if they've got this listing agreement signed with someone for years and years and years, like that's just next level. Like I don't even know what to think about that. There's always ways that people are trying to make an extra couple of bucks in the real estate market, doing something that's just a little questionable. When it comes to selling your property, there was a class that I took back when I first got into real estate, and it was like a marketing class, and talked about who was going to be the buyer for each of these properties. And I think the best question to ask ourselves, or a good question to ask ourselves when we're listing a property, is who's going to be buying it, who is the buyer for this property, what's going to make it accessible for that buyer to purchase the property. And if one buyer won't buy it, why not? Who is going to buy it? When we're selling properties that have maybe a tenant in it, or a lease that's signed for maybe a few more months, or let's say it's a situation where the property is really distressed, like we just closed on one today that was really, really distressed that we had taken over from another company, and it's figuring out who is the best buyer for this property, right? I think about it in like commercial terms, are always like, what's the highest and best use of this property? And I think if we can think through it that way, it makes sense as to how to time, and I don't want to say time the market properly, but at least know what's going on in the market and how long it could potentially take to get that particular type of buyer. In this market, it's still a seller's market for most of Maricopa County. You have some fringe areas. You've got Buckeye, Queen Creek, Maricopa that are still rated as, buyer's markets because of the supply and demand ratio. But when you look at the numbers in the grand scheme of things, it's a seller's market. So as a seller, and you've got a property to put on the market, or you're entertaining the idea of selling an asset or two or more, the question becomes, who are you going to sell it to? What are you going to be held back from? Who can't you sell it to, right? Top line, always, when we're pushing the value, we're going retail, right? Listing agents will retail your property on the MLS, push the value a little bit, maybe stage it if given the opportunity, professional photography, do all those things. There's a cost associated with that, but there's also an upside potential. Now, given those circumstances, once you start adding different layers of complexity to it, really forces you to take a lower and lower price. When thinking about selling to like these robocallers or these guys that are, or these companies that are calling you on the phone, you're probably getting at least one or two a week still. Will you sell your property? Okay, at what price? Awesome. What they're looking for is they need to be at like 70%, 70 cents on the dollar to make those work. If they have to put more money, more rehab into them, oftentimes that doesn't work either. So although it may feel good that yes, your property is getting interest, every property would potentially get interest. And not saying that in a rude way. It's just knowing the source and knowing where those numbers come from. I have never considered or would consider selling to someone that's calling me, giving me an offer, because that's just a good starting point in figuring out where do we go from there and who's a better buyer. If the property is greatly distressed, maybe that's your play. But again, looking at the market as a whole and seeing who is the buyer for your property, how are things going to be affected? Now, this week in the market, I'll give you a quick update, and then I'll call it done. In this market this week, interest rates shifted again. And the Fed came online, a week and a half ago, said that they're not really considering doing a rate drop again this year like we thought, like everybody's anticipating. And the market got affected, and rates got affected, and you probably felt it in your 401k or whatever happened, whatever you've got there. Well, how that affected a lot of buyers was, if they hadn't locked in their rates yet, there's a pretty good possibility that if they were under contract and they hadn't locked their rates, their payment was going to be affected by that shift in rates. So again, depending on your price point, depending on where you're either buying or listing, that could affect you differently. We saw, the last couple of days online, more than a few realtors that I know had properties under contract. All of a sudden, the buyer popped out because they weren't able to continue moving forward because financing terms had changed so much, and it was going to affect their payment so much. So it's weeks like this that make you realize, like, okay, things can change pretty quickly. So it's making sure that you've got who is the buyer for the property, how could that negatively or positively impact you as a seller, and what does that look like, right? And as an owner, as an investor, how does this volatile market, which it is, it's changing. Like every week we see something a little bit different. It's not a bad market at all. Like it's a pretty good market. It's just knowing what to expect. You're going to put a house on the market. How long should you expect it to be on the market before you consider a price drop? Should you overprice it? By how much? What's realistic? What's not? These are all things that, the market and statistics and data, current data, can really help you. I hope this information was helpful. I'm just kind of talking today because it was like we saw so much on the sales front. This week it has been busier than it's been in years. I think I said that a few weeks ago, but this takes the cake. And yeah, I appreciate you watching. Thanks.